Let's wait for others. Let's wait for others to show up. She's falling, doesn't even know it. I know it's all that she really wants. Change it. Yeah. Are we not tonight? Changing into something red. Her mother, under like a count, just reminds her of the minutes and bits of innocence she loved. Ooh. Nicho, now me they tell say they play gospel song. Don't suffer. Mentor don't suffer. I dey play jam for my house. They say I dey play gospel song. Say your earpiece don't spoil. Hey, Nicho, I been a Nico, I been a we. You know say that me no wahala, no wahala. Okay, 26 people here. Almost. Sure, I go just start this thing like this. There's no time. Okay, guys. Okay, Nicholas. No wahala now. I don't carry you for mine. Nah. All right, guys. Let's get to business as usual. Let's get to business. So I dropped a video of a live analysis that I did this morning with a group of my inner circle members. You guys can go check it out. It's in the session section. Okay, so you guys can check it out. I don't know if it has downloaded finish. Let me see. Okay, yeah, it's there. So you guys can just quickly check it out. We did a live analysis together. So I want us to do like same stuff similar to that. So but we'll be looking at liquidity for now. That's our next topic. Well, there isn't really much to discuss about liquidity, but we'll just go about it because not everyone understands what liquidity is in the market. A lot of us are the liquidity in the market. So because we don't know what the liquidity is, so we are the liquidity. Now, I know you guys must have heard that this, what they call it, these double tops, double bottoms, and all that, they're all liquidity and stuff. Yeah, quite all right. They're all liquidity. All this double top is liquidity, double bottom is liquidity, right? They're all liquidity. Where you have equal lows, where you have equal highs, they're all liquidity. But the thing is that everywhere in the market, right? Everywhere in the market, there are liquidity everywhere. Your highs, your lows, your highs, this where market does this, your highs, your lows, they're all liquidity. This right here, this high right here is liquidity. This low right here is liquidity. This high right here is liquidity. This low right here is liquidity. Even this trend line here, sir, is all liquidity. Everything in the market is liquidity because that's what moves the market. That's what moves the market. Okay, liquidity is everywhere because without liquidity, market will not move. Now, who can tell me what's liquidity? Can someone just type in the chat box what is liquidity? Money, 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 money. Thank you, money. Liquidity is money, fam. So if I say, yo, man, you got some liquidity on you, fam, then you'd be like, yeah, I got some liquid, man. That is money. Simple, simple. Okay, so there's money everywhere in the market because without money, market will be stagnant. The market will not move. Okay, so that's where we have, that's where the ranging market comes in. That's where the ranging market comes in. You see market doing this, this. Just know that there's no money in the market yet. Nobody wants to spend their money. Nobody wants to buy higher than the seller. Nobody wants to sell lower than the buyers. But all of this are still liquidity. You shock you. Hey, God. All of these are still liquidity because now, when people are buying, when people are selling, their money there. But the thing is that the end goal is that the liquidity needs to be taken out for price to move. Before price moves. Yeah, British asset in it. Abu Bakar. Abu Bakar, you are speaking British. Okay. Salam alaikum, sir. Salam alaikum. Oh my goodness. Okay, guys. Okay, guys. So when you see something like this, guys, you know that whenever price then breaks out within this range, just know that liquidity has been swept. Maybe price does this. You just know that, okay, the buy side liquidity has just been swept. Or if price does this, just know that the sell side liquidity has just been swept. Okay, so that is it. Now, in the advanced market structure, there are what, please, hope you guys are jotting down. Hope you guys are jotting down because I don't know if this class will last long. Sure. Please jot down, jot things down, jot things down. I want to tell you guys about liquidity in the advanced market structure. There are what we call types of liquidity in the advanced market structure. Let's write it out here. Types of liquidity. Right? Now, in these types of liquidity, it's in alignment with the advanced market structure. Okay? It's in alignment with the advanced market structure. We have one. Let's use a. We have what they call the transactional liquidity. What's going on? One, transactional. Abu Bakar, take your time. You want to sell my video, go sell it. Transactional liquidity. Okay. Two, we have what they call the structural liquidity. I know some of you must have heard this already before, but there's no harm in learning it again. Liquidity. Where Q day for you? Okay, guys. Can you guys see? The what we'll call inducements. Let's focus on this transactional liquidity and structural liquidity. Now, you guys, what is transactional liquidity? For the simplest term, transactional liquidity can be defined as a liquidity used for correction in the market. Okay, guys, please note it down so you don't forget it. Transactional liquidity is used for corrections in the markets. Okay, then what is structural liquidity for? Let me write it here. It's used for correction. Then the structural liquidity, what is it used for? It is used for continuation. Right? Can you guys see my screen? This Zoom user, I dey suspect this Zoom user. This Zoom user fit go be Dax. This person where they say and reducement expansion. Who are you? Reveal yourself. Dax, this could be you. You feel a disguise. Who is this person? Who is this person? Zoom user, who are you? Dark student. Dark student. Some people they do undercover for this thing. No wahala. Now dark students. Because the way they talk now you can they teach the class. But regardless, inducement, what is inducement used for? Expansion. Inducement is used for expansion. All right, guys. Yes, so identify yourself. Oh. No, of course, some of you guys will know this stuff already, but it does not mean that I will skip it because not a lot of people know this already. Okay, there are some of you guys that are trading support and resistance. They have no idea what transactional liquidity is, what structural liquidity is. Okay, so please, I just want to make sure that I teach everything. Yeah. All right. So now, what's transactional liquidity used for? It's used for correction. Now you see this. Remember, I told you guys about this move right here. Once a transactional liquidity has occurred, the first break in the market after a sweep of liquidity, that's your transactional liquidity. This break right here is your transactional liquidity. This break right here. This break is termed as your transactional liquidity, which is used for correction. So after this break, you are anticipating what? You're anticipating a correction to take place. So once this correction takes place, you know that, okay, yes, the transactional liquidity has occurred, right? Then when this happens, right here, you know that this second break right here is giving you a structural liquidity. So after the second break, we know that, okay, yes, this has given us a structural liquidity, right? This has given us a structural liquidity here. I remember what must always happen to the structural liquidity. It must be taken out. Now, we have done all of this model over and over and over again, but some of you did not know the terms. We're just like, okay, breakout, retest, and all that. But these are the terms for it. So when you see a transactional liquidity, you know that, okay, price has given you this correction. You know that, okay, a transaction has occurred. Okay, a buy transaction has occurred in the market. It has given you this liquidity. Then when price does this second break here, you know that, okay, this is a structural liquidity. Price has provided the structural liquidity for you. For it to be taken out later in the future, for price to be taken out later in the future. Now, if you don't understand, like if you're not able to identify liquidity in the market, just know that the ISI, let me write it out to make it simple as possible. The ISI before a protected I is known as liquidity. So I don't want all this grammar to be too big for you. The ISI before a protected high is known as liquidity. So how does that work? Now this is, wait, let me clear all of this to make it easier for you guys, to make it easy. I don't want to make it complex for you. So you don't start confusing yourself with what is transactional liquidity, what is structural liquidity, and all that. Why is this all this? Okay. So now the ISI before a protected I is known as liquidity. Now look at this. We have a sweep of liquidity here, right? We have a sweep of liquidity, right? Then we have a structural liquidity here, right? Then we have this. Then we have this, and we have this. So now, this is your protected eye. Quite all right. Abi, this is your protected eye. Then which eye is closest to this protected eye? That will be your structural liquidity. The eye closest to this eye. Like there was a picture one of you sent to me. I think Rash, I don't know if it's here. He sent me a picture. Let me see if I can show you guys. I told him to go and reanalyze it again, because he sent me a picture and this was what the chart was like. This was what the chart was like. Let me show you guys. It's like this. We had this sweep right here. Then we had this eye right here. Then we had this break, right? Then we had another eye here. Price did something like this. Right? Then he was anticipating that price is going to do what? Price was going to take out this eye and then sell off. But what did I tell him? I told him to go and reanalyze it again, to look out for a structural liquidity again, because now this is the protected eye. So now your structural liquidity needs to be the ISI before the protected eye. So where is the ISI? This cannot be the ISI before the protected eye. Never. It's not possible. So you can't use this as a structural liquidity because there's another eye here that's closest to this one. I don't know if you guys are understanding. If you understand, please say yes in the chat box. Yes. Okay, good. Good. Nobody say, Rats, you don't understand? Like I said, the structural liquidity on its own is not hard to identify. It is just basically your lowest low before your protected low, or your highest high before your protected high. So now, where is the highest high before this protected high? This is the highest high. This high was higher than all of this. So he drew this out. He drew this out as a structural liquidity. This was a structural liquidity. So he was anticipating that price will come here and start selling off. But I told him to go and make corrections, because now this high is lower than this high. This high is higher than this high. So now your liquidity is your highest high before your protected high. So I told him to make corrections. That is where you see that, okay, this year gives you your POI, right? So you know that this is where you're expecting price to come. Price is supposed to take out the highest high before the protected high, and then to sell off from there. Do you guys understand what I'm trying to say? Why is this in again now? So this is what price is supposed to do. Although there's a liquidity pool here. There's a liquidity pool here. So price might come here